So I think it's pretty clear that we have a massive problem here in the US. And the reason why we have this massive problem is because the US economy is going to head in one direction. But which one is it? Here's the thing. Almost 90% of fund managers expect the US is going to remain stuck in stagflation as we deal with this banking crisis. And investors now think that a systemic credit event will now take place in place of inflation as the most critical problem here in the US. And we need to understand why this is. But before we do that, all I ask is if you can do just one thing, go ahead, hit that like button for the YouTube algorithm, and let's get right down to it. So what is going on? Because we've heard that the risk that is the potential crises that we are facing here in the US is something like inflation, is a banking crisis, is a housing market, is unemployment, the possibility of a recession. All these things are parts of the problem. But here's what is the real possibility. The one thing that experts have agreed on is that stagflation will be what is going to cripple the US economy. But why? Well, first off, what is stagflation? Stagflation is persistent high inflation combined with high unemployment and stagnant demand in the country's economy. That is the definition of stagflation. Now, currently we have inflation, which is set at 6%, and economists believe that we will see inflation drop to at least 5.8% next month. Here's the problem, though. We're going to have these new numbers that will come out at 8:30 a.m. Eastern Standard Time. This would come out on April 12th, okay? So a few weeks away. Here's the reason why this is a problem. The market is already expecting we are going to have inflation at like 5.7 to 5.8%. Guess what happens? If the market or if the report comes out and inflation is 5.9, 6% or even higher, the market is going to freak out and millions of people are going to lose more money in the markets. This is why this is just part of the problem. But here's the big problem we're facing, and it has to do with the Federal Reserve. The Federal Reserve has stated that they are going to raise interest rates one more time. They say we will get to 5.25% in May. This is their next meeting. Now, according to market expectations, here's the problem. They believe that there's a greater chance of seeing a rate pause, not a rate increase, meaning rates are going to stay at 5%. But what does this do to inflation? Well, here's the problem. This is why this is an issue. Inflation is likely to remain elevated quite longer, which is why many people believe that stagflation is our new economic problem. Again, if we see high inflation and we see high unemployment, or we see a decrease in demand, that's a problem, and that's not something that we need. But here's what you need to know: if inflation takes longer to come down, why can't the Federal Reserve just fix this? This is one of the questions that I got just this morning. And it says, why wouldn't the Fed continue to raise rates? Wouldn't that be the best thing for the economy? Well, it's simple. If the Federal Reserve is worried about the banking system, they would halt any additional rate increases, which sounds like that's probably what they're going to do, especially after we're getting more and more reports that smaller banks and even some mid-sized banks are having problems. Currently, banks have dug themselves into this hole, and the easiest way out of this is if the Fed decides to lower rates and reduce the amount of losses that these banks are holding on their books. That would be the easiest thing. The problem is the Federal Reserve, should they do this? Well, if their goal is to bring inflation down to 2%, then no, they shouldn't lower rates. But that might be what they do sooner rather than later. But here's another problem. The other problem is that the market expectation is that the Federal Reserve is going to keep interest rates at 5% for the rest of the year. This is exactly what we are expecting. If this happens, we won't see too much additional pressure on the banks, but it doesn't mean the current pressure goes away. Here's the main problem. The Federal Reserve cannot fix the economy and also bring down inflation, at least not for now. They can do one or the other. The Fed can bring down inflation by reducing the money supply, but by doing this, it's likely to bring the U.S. economy into a recession and possibly even a depression, depending on what the banks do. Or, here's the other option, the Fed could decide that inflation has come down far enough, and they could decide to lower rates in an attempt to fix our banking crisis, but by doing this, it's going to cause additional inflation, potentially runaway inflation. So this is something that the Fed just can't do, is decide to lower rates. Now, this is why the Fed, and this is why many experts are saying this and have been saying this for quite some time, is the Fed is really stuck between a rock and a hard place. And based on the statements from the Federal Reserve Chairman Jerome Powell, they have a plan, but their plan is to see where things go as we move forward. So what does this mean? What does this mean to you and I? Well, I was talking to a few friends today, and one of them asked me, should I put all my money into X stock, a certain stock? And I said no. Now, this is not financial advice. I'm just telling you what I told him. I told him that there's so many question marks out there right now. For you to dump all your money into any one investment would be crazy. And the reason why I say this is because, yes, if the market turns around and goes up, this person looks like a genius. But if the market actually goes in the way many people are expecting and we're going to see a dip, well, it's going to look like that you had no clue what you were even doing and you just wasted a bunch of money. And when I say a bunch of money, he's talking about a bunch of money, okay? Life-changing amounts of money. And so I told him, I'd be patient. You can, dollar cost average into this market. Right now, it's probably not a horrible idea, depending on how much money you're going to put in every single day or week or whatever, to just be consistent. Over the long run, you'll be just fine. But he also wanted to know, well, what about investing into the bank stocks? And I told him the exact same thing, that if it goes up, you look like a genius. But if it goes down, and there's a lot of expectations that these little issues that we've been facing, well, we are just, I think, a couple months away. We are a couple months away from seeing just complete disaster. And I'll talk about more of that, in a later video. So make sure you go ahead and click that subscribe button so you don't miss that one. But there's some things that are going to be happening here in the U.S. very soon that are going to dictate where this economy goes. Whether we are strong enough to weather through this or not, I don't know. But that's where some people are worried, and that's why if you are holding your money on the sideline because you're worried about investing into stocks, I get it. But here's the thing. At some point, you will have to take that jump. You will have to invest. Whether it's the right time or not, I can't tell you that. I don't know. But here's what I do know. The U.S. economy is only going to go in one direction. It's not going to sit where it's currently at. So if you think unemployment's going to stay exactly where it is sitting right now, it's not. If you think inflation's going to sit exactly where it's sitting right now, it's not. If you think this banking crisis is going to stay exactly how it is right now, it is not. What we're going to see is the U.S. economy is going to go in one direction or the other. We're going to see banks start to just falter. They will collapse, or they're all going to get better. We're also going to see inflation. It's either going to go up or it's going to come down. It's going to go in one direction. It can't go in both. It's not going to stay at 6%. Then when it comes to the American people, here's the problem. When the economy starts to shift and it's going in whatever direction it's going to go in, the problem is the American people are going to have it made up in their mind as to what is going on. So, if we start to see banks collapse, guess what? People are going to start pulling their money from their banks. Whether that bank is at risk or not, doesn't matter. They will start pulling their money and holding it. And I've said this before, diversify your money. And this is something that somebody brought up to me as well. That if you continue to just push that, hey, banks are in trouble, and I'm not saying all banks are in trouble, but I continue to push this thing is just diversify. If all your bank is in one bank, or all your money is in one bank, take half of it out, put it into a different bank. That way you're somewhat diversified. If one bank were to go under, at least the other one, you can continue to pull money out for the time being until the other bank, you get your FDIC, hopefully it's FDIC insured, and you get your money back, right? That's all I'm saying. But the big issue is never keep everything in just one spot. So we're going to see what happens. But what I can tell you is that there's a lot of question marks on this economy as well as other economies around the world, including Europe. So as we get more information on all that, I promise I will bring you the latest news and updates as soon as we get it. All I ask is if you can do two things, go ahead, hit that like button, click that subscribe button, and I'll see you guys on the next one.